Hi, Trent Mell, President and CEO of First Cobalt, Canadian-based battery materials company with a refinery in Canada, as well as a development play, copper cobalt in the state of Idaho in the USA.
Trent, good to have you back. We saw you, I think, mid to end of June. Why have we got you back on so soon? Well, exciting news today. Tell us all about it.
Yeah, the hardest part of my job, I think, is always raising the money. And so having a project in hand with engineering studies and government support, the next leg was to raise the bulk of the 60 million US that we needed. So we've got more or less 15 locked up. We do have 15 locked up. So today we're announcing the conclusion of a financing for the other 45 million US dollars that will see us complete construction of our refinery.
Fantastic. So just break down the construction, because I noticed you ended up going down the convertible route for part of it. Why was that?
Yeah, we in March announced that we were pursuing secured debt with a big international bank, and if you've done those in your careers, you probably have. They're painful, right? And they lock everything down. And look, it's a tough process. And 60 million or 3 billion doesn't matter. It's kind of the same checkbox with check marks for a big bank. So, as the cobalt market started to improve in its outlook and price, and our prospects started to pick up, the convertible market, which is not typically a market that a free cash flow company would be able to tap, it did open up to us. And so the split for our financing is 37.5 million. This is all USD in convertible debt, and then 7.5 in equity. We've also got an option in favor of the convertible debt holders for an additional 7.5 million to be exercised over the next 60 days should they want it. So in aggregate, you're looking at 45 base case with an upside scenario of 52.5 million US.
Got it. Okay, but just on that, because usually people go for a kind of clean debt equity split, whatever ratio, 50-50, 60-40, whatever, 70-30 if they're lucky. The convert, when you say the market opened up to you, because typically, that's seen as a sign that the debt was not moving as quickly as you wanted it to, and it is fit for purpose for now, and at some point later, you'll refinance it out. I mean, was that what happened? Is that in the thinking?
No, I think you're bang on. I think the debt wasn't moving as quickly. This is actually cheaper capital. The debt that we were looking at, it had a slightly higher coupon and it had warrant coverage as well, so more dilutive over the long term. And so, 6.95, if I was a tech company, you'd probably scoff that. But in our industry, pre-cash flow companies, if you go the private equity route, for instance, they're trying to solve for a 15% return on capital invested. In our case, sub 7 is a fabulous outcome. And I got to tell you, when we were looking at how do we price this, what are the peers, what are the comps, it's darn hard to find one that is not already cash flowing. So I think we pulled off something that's quite interesting. And you're absolutely right. We can refinance this as we de-risk the story and re-rate our stock.
It's actually interesting. I think the fact that it's single digit for a convert is good news. Indeed, it suggests they have some faith in what you're doing. But are there any kind of securitization components to this? There are. Okay, well, give us that.
Yeah, and that is what is different. Converts typically don't have security. In this case, we've got security over the refinery over the term of the convert, and then we've got security as well over our Iron Creek development project until such time as we commission the plant, and then that will be released thereafter. So. It's a component you got to execute. Now we're not building a mine, right? We're recommissioning a refinery, and so for me, the execution path right through to commissioning and production is certainly the risk profile is a lot lower than it would be if you were developing a greenfield mining project.
Okay, but the key thing is you wanted to be doing this around. You want to get this thing financed around now to kind of make sure the market saw that you're actually delivering what you said you were going to. So whatever the shape of that today, I guess it looks slightly different maybe in the next 12, 18 months. Market moving, wow, the market's been a bit horrible for the last 6-8 weeks for commodities generally. You've moved sideways. So you're getting positive feedback about your plans?
It's been good. I think just getting it off the ground. So you look at, we're projecting sort of 35 million EBITDA. This would entail, coupon payments of about 2.5, 2.6 per annum. So still leaves you a good margin. And then you're carrying the bullet payment to the end, which hopefully through a re-rate, you're either refinancing or you're paying it off with equity. So it just gives us a lot of wiggle room as a company to get through the ramp up and the commissioning stage and the qualification of our product with OEMs and battery makers, and gives us that extra margin as well to execute on a broader vision. which will include battery recycling, not in the not distant future, I would say.
What I'm intrigued by, and I know what you're using this money for, but you've got a few components, a few variables here, right? Where battery recycling is coming into the mix. I think it's getting very, very hot and frothy in the marketplace, though. So, are you finding people wanting to have more of a conversation about that side of the business, or because let's face it, you're going into DLC, you're buying cobalt, and then you're refining it over in the States, and you'll get into some, I don't know, OEM discussions, et cetera, but it's of a certain scale, right? So where's the value being attributed?
I think, it's on both sides. I mean, you're right. Recycling changes the conversation, but at inception, it was this notion that, okay, 80% of cobalt, refined cobalt for EVs is coming out of China. We're seeing it today, right? With container rates up at 5-10-fold where they were 6-8 months ago, a year ago. Containers at $5,000 a piece instead of 500. So that just underscores the supply chain risk. So it's not just critical minerals and geopolitics. There's some real supply chain concerns that have to be addressed here. So when you look at, okay, if I don't buy from China, where do I go? Well, it's the Kokkola facility in Finland, and they're full up, right? And North America's got nothing. And so the dialogue around North American supply is interesting. We're a little early, right? Because the supply chain is only now just starting to be built out with the assembly plants first, and now we're working our way up the supply chain. But once we started to bring the recycling into the mix, I would say it took on a new sense of urgency. That the level of discourse got all the more interesting, because now you've got a whole other group within the OEMs that's trying to figure out what do we do with end-of-life batteries. And that I think it underscores, Matt, is just that we're not just a cobalt company, right? It's a hydrometallurgical refinery. It's polymetallic. It was in the past. It will be in the future. And I think it kind of drives home that there's more that we can do beyond this initial business case to contribute to the battery material space.
Okay, so that interests me. So right now we're funding, I guess, silo number one, which is all about the cobalt. First, cobalt. We're talking about other types of products and revenue streams for you coming down the line. So what does that mean? What should we be listening into? Are we going to get a name change? Are you going to be looking for some kind of re-rate because you're going to define yourself as a critical minerals company or industrial minerals company? Yeah. What's the future look like?
Yeah, future is we are going to evolve here as a company, as a corporate entity. So, and we needed to walk before we could run, right? So I needed to get this financing done to demonstrate that we've got our path here to cash flow and the next year from the cobalt plant, cobalt processing. I shouldn't call it a cobalt plant. But thereafter, and we've been pretty public about this. We're looking at black mass recycling. So that's the crushed cathode material you get once you've collected and disassembled the batteries, mostly consumer electronics. The met testing work that we've done thus far is pretty straightforward. And using our flow sheet as we know it today, we can recover cobalt, nickel, copper, lithium in a carbonate form, graphite, maybe manganese. So you start to see the whole suite of products there. And so our second silo, if you want to call it that, second phase of our evolution would be to layer in on top of 5,000 tons of cobalt sulfate produced per year. Maybe you're producing 1,000 tons of recycled batteries. But the idea here is nobody's doing it in North America at scale. We've got the plant, it's built, it's permitted. You get into that. And then there's a phase 3, which is a sort of a game changer that brings you into a broader ecosystem.
Okay, so North American focus, obviously, that's where you're based. What sorts of conversations are you having to date, given Silo 1 and the potentials of Silo 2?
Yeah, so as I alluded to, the North American market, it's behind Europe and clearly behind Asia. And so as an early mover or first mover, we've got some OEMs that have a broader, a longer term view of things and see the value. Others are more focused on the immediate term. And so, we've got the challenge in terms of concluding a contract is we're not yet producing, right? We're giving them indicative material specs, but it's not yet coming out of our plant. And so to kind of break the logjam here of all these discussions we're having, you might see us come out with an MOU or two just to show the market that, we're discussing with this counterparty, and it'll just help us focus our attention, because right now we've got a dozen conversations going on while we're building the project. So it'll come, but I think the focus of those initial MOUs could be one or either of the recycling and the cobalt sulfate. We've got a European-based vice president that's leading those commercial talks as we speak. So that's probably the next big catalyst to come out over the course of this year.
Right. So it's early stage. So it is where you want to be. You want to be known for, but it's early days. So right now, take care of business, get revenue flowing. So let's talk about that. What's the time? Now you've got this money. How quickly can you move? When do you get into revenue?
Yeah, to your point earlier, that's why we needed to get going here. The next step on our critical path is to order the solvent extraction equipment as it's kind of a package deal. So you'll see that coming soon. We know where we're going, big name, and we'll have that. We'll be able to sign that contract as soon as we close this financing on September 1. And then it's critical path. So it's it's pouring the concrete before winter, because nobody likes to pour concrete in the middle of a Canadian winter. And then it's just the equipment ordering and installation. So we built up a pretty good owners team, more than I anticipated. We went down this path 8 or 9 months ago, where Mark Trevisiol, who ran the Glencore, was Falconbridge smelter back then in Sudbury, great processing experience. And we built a fabulous team of people with 15 to 25 years experience, 8 or 9 of them. And so you'll see an increasing role by FCC personnel with Ausenco as our key partner, BPCM, and just working our way towards a first production in Q4 of next year. And I would say in terms of selling the product, the OEM or battery offtake is where you want to get to. No shortage of traders that'll buy the product for us. So selling it, we got the Stratton that we announced previously as kind of a backstop. We've got others that would take it from us, but I think what shareholders really want to see is that integrated supply chain where we're actually tied to a brand or two, probably two, that would dictate our path here for the next decade.
Okay, I'd forgotten you were using Ausenco. That's good news indeed. Have you actually put guidance out with regards to what the revenue forecast will be? Because like I say, I referred earlier, it's of a scale. It could be bigger, and if it was bigger, you'd probably see that reflected in your share price. So it's of a certain scale, which is fine, but you've got other options further down the line. But today, what do those numbers look like, and what will they look like?
Yeah. So 50 ton a day throughput, producing 5,000 tons of cobalt in a sulfate product per annum, which is 25,000 tons roughly of cobalt sulfate product. And there is this is not hard to scale. I would say even within our plant, our 5,000 ton nominal, there's opportunities to grow that further. We'll probably save that for another day. And then you add the recycling. Recycling comes over top of that. And so in our current plant, which operated from 96 to 2015, we've got a bunch of equipment there that's undersized for what we're going to be doing. We think we can take probably 25% of the equipment there now and repurpose it for initial recycling. And recycling, out of the gate, just to get ourselves started, it's going to be really work on the leach characteristics. And then you're producing a saleable product that may not be battery materials. And then as we grow into that, then you do the back end investment in the final product and produce your nickel sulfate and battery grade materials that would go right back into our supply chain. And so, year one, we're guiding at $35 million US of EBITDA. If we can find some synergies within the plant, that could grow further. Add recycling, that gets a little further from that. We got plans for nickel further down the line. But you look at where we are today, we're about 4 or 5 times EBITDA on a forward basis. So I think there's a lot of opportunity to re-rate, and hopefully the financing today is the first step down that path of creating some value.
Right, but where's the point where you get to kind of free cash flow or enough cash to actually deliver that scale to deliver some of the other revenue streams? Because
we'll have more on the recycling end of September. I don't envision a heavy lift on the capex front for the recycling, but I'd rather hold my comment on that, I guess, until I've got sort of the final studies in front of us. But we've got a leading engineering firm that's done a lot of this work that's working with us. And if you think about it, right, we're using the same lab, the same power lines and infrastructure and water pipeline. And so we're layering in incremental feed. If we're running 50 tons a day of cobalt hydroxide through our plant, to put in even 5 tons, right, through the front end on the leach basis is not a big lift. What it is really is just looking at the different solvent extraction flows that you're going to need to add in the back end, some of the pieces we have in place so that you could recover your nickel, your copper, and the lithium we're working hard at right now. But it all seems very doable. I think it's a question, frankly, for us of being the first mover, right? The first mover of doing the recycling on a scaled basis so that as that market grows, and it's still pretty small in North America, we're already established and we've got a proven flow sheet, and we can just keep growing with the growing recycling market.
Okay, look, I guess you can't tell me any numbers yet. Please come on when you have kind of nailed those down a little bit more, because I'm intrigued by this, because the kind of technical expertise, the team that you put together, some of the partners that you put together, you obviously tick the boxes, but just trying to understand what the margins are in terms of, because obviously you're not mining this, you haven't got mining risk, but you are buying it in the open market, transporting it, processing it. It'd be great when you can give the market some guidance as to what your finances look like going forward. Are you going to have to raise any other money going forward in terms of pure G&A over and above this capex?
Pure G&A, certainly not for the next 12 months. We're in good shape. I mean, I think if we were to do anything, probably the easiest way is just to put an ATM in place, right? And at the market instrument, so you can tap the market as you need it. But I don't see any need for any significant lift. But you raise $1 million or $2 million a quarter in a strong cycle, that's probably the responsible way to do it, in my opinion. On the recycling, probably a little early, but likewise, I think I'd like to treat this as, we've got the money to go out and build. Let's go out and build. We do need, full disclosure, we do need to build out a working capital facility, right? We got to buy, as you mentioned, we got to buy the hydroxide from third party. We got to carry that inventory for 90 days. So working hard now on the next leg, which is kind of a circa $50 million working capital facility, but coming along well. And with the strength of this financing, the coupon we're getting there, I expect some pretty good results on that facility as well in terms of cost to maintain it.
Okay. Again, I guess you'll let us know when you know. Some of the questions sent in have been all around, which EV companies have been crawling over you? Are you in conversation? What do they need to know? It's the usual story, but you're a bit early stage for them. So what sorts of conversations can you have?
Yeah, I mean, it's obviously all under NDA, and it's I guess the best I could say, they'd be Western, right? They'd be North American, European. They'd be established. They'd be upstarts. We're not biased. It would battery companies. Michael Insulin, who comes out of ERG, was an analyst at CRU. He's traveled the world marketing Cobalt in the past, and he's got a great Rolodex. So any given day, he's got a handful of meetings. If I was to summarize, there's probably 25 conversations that are going right at different paces, and where they land, we'll see. Some more eager, and some faster moving. So I think I know where we're going to land on at least one of them, but yeah, probably early to speculate on how quickly it'll happen. I'd do it tomorrow. But some of these companies take a little longer to kind of document things, and it's a question of whether we can do, in my estimation, do an MOU, right? As I say, stop all these conversations and focus our efforts, or at least dedicate half our supply over here. It'll really allow us to be take a more of a rifle approach to how we're doing things. So that's my preference. Get an MOU, tell the market who it is we're going to be partnering up for a big part of our supply, and that'll, I think, allow us to advance things faster than maintaining dozens of conversations.
I mean, things have changed in the space of just where are we? When did we start moving? December. Things started really moving for you. It means you're now moving at quite a pace compared to where you were. So people aren't having that conversation of, well, is this plant ever going to get going? Or can you? Well, you've answered the finance question here. In terms of the business model, your financiers, was any concern there about any aspect of what you're doing? Were they sort of questioning whether this made sense?
Yeah, I think
what's the pushback?
Most of the counterparties we spoke to, the pushback might have been, and I would point them to this. I said, look, if there's any risk you're worried about, is can we produce a commercial grade product, right? Can we produce something that's going to be saleable, that's going to be battery grade? Refurbishing a brownfields project, there is some uncertainties, right? You assume so many pumps work and some don't, but in a capex of 60 million, I mean, what's the plus minus? You go up 5-10%. You're not going. You'll figure that out, right? It's not like a mega project overrun. The issue is, can First Cobalt produce a quality product? And we demonstrated some of that with SGS in our lab work. We can demonstrate track record with the team that we have, and the interest and the products we produced to date. But until it's actually coming out of the back end, I think that's a legitimate question that we're going to have to get our way through. And I don't have a magic answer for you here today. I will say it's easier than, say, a lithium product to produce a cobalt sulfate to spec. The qualification periods are shorter. You keep in mind, with the cobalt sulfate, you're actually blending it at the precursor level with manganese and with nickel. And so while every battery maker has a cobalt sulfate spec that they'll show you, and here are all the deleterious elements and the minimum thresholds, there's actually a fair bit of flexibility depending on what they're blending it with, or blend your sulfate with another sulfate. So there's lots we can do. And so, illustratively, the contract we have with Stratton, our backstop contract to sell all of our sulfate, if we don't meet spec on day one, we probably won't, because we'll need a ramp-up period. Not a problem. We'll be selling it likely to another refiner for upgrades, purification, and it'll be blended into another stream.
Are you sort of urging your team some level of caution? Because in terms of how you project those numbers out, when you're doing a restart, you're doing a brownfield, things don't always quite go according to plan. That ramp-up period, you expect 3 months, it may be 6 months. And the market will see that as a negative, and sometimes you stumble and fall and recover, and sometimes you don't. So how do you manage that process? Well, I know you're aware of it.
I'm aware of it, and I struggle with that, right? Because as a junior, particularly when you're in the capital raising phase, you want to put on a brave face and talk the macro and talk about how you fit within that story. But we all come out of bigger companies. We all know, we've all seen it. I've had some wonderful success stories, and I've had a couple of horror stories, which I'd rather not talk about here. But that's where you learn, right? And if you're humble, you recognize that. And so, we're going to be a little bit muted. We were talking about an October restart. Now I'm talking about a Q4 restart. I gotta build in that cushion. Financing was taking longer, and so I'll massage the message, but I'll try to be earnest and truthful throughout. And if things do start to drag a little bit, you'll let the market know. But I think the important thing here is you look at the credentials of the team. Look at the milestones. I think we've done a pretty good job of checking off the milestones as advertised. This financing, I thought I'd have done by the end of June. We would have done. So we're lagging. So we're 2 months late, and we'll do the mea culpa there. But we got it done, and we got it done at a great coupon. So hopefully the shareholders will forgive us. We did the equity slice on top of that overnight. Obviously, it comes at a discount to market. No warrant coverage, which is great. So we got to trade through that and see if we can get a bit of a re-rate. So you gotta balance. And conversely, now go back to the cheerleader side. I think we got a great future. I think this facility and the permits and this plant could put us down the path of something bigger. And I would point to Harjavalta in Finland, where in the same park, in the same industrial park, you've got cobalt sulfate, you got battery recycling, now you've got nickel sulfate, and guess what? The precursor plant set up right there as well, because you can bring everything under one roof and pipeline it over and not have to salt it and bag it and chip it. And so that's the grand design 5 years out. Where are we? First Cobalt is no longer called First Cobalt. We're producing cobalt and nickel sulfate, and we've got a precursor partner right there on site with us. And we are taking those initial steps to walk down that path. I'm not calling that out from the hilltops yet, because we got a bit of work to do, namely, where's our nickel coming from? Canada's got a lot of it, sulfides, so we've got to do some thinking around what that could look like.
Okay, well, Trent, I know this was a quick, meant to be a quick call, just to say you got the financing done. Very different heady days compared to December, Q4 last year. Numbers, contracts. What else do we want to see? Offtake agreements, more on the recycling, a bit more detail when you have it, please. Thank you very much for today.
All right. Thanks, buddy. Talk soon.